You're with us here on a fresh new edition of Taking Stock. This is the show where we look back at the week which has gone by, and what a week it once again has been. We started with a Monday which basically was a bit of a wobble. The market sold off aggressively from there, but we came back and came back strongly. On the Nifty, it was a 1.5% higher close, fifth straight week of gains. The Bank Nifty, though, was a little lower. Lots to talk about. There's enough churn, rotation happening intra-market, which will be the focus over the next 30 minutes. What should you focus on? And, of course, we'll look ahead at what happens in the coming week. You'll hear from S. Krishna Kumar of Sundaram Mutual Fund. You'll hear from Rohit Srivastav on the technicals. Of course, he's with India Charts, gets you a preview of what you can focus and actionable ideas for the next 5 trading sessions as we come back. But as always, let's spend 2 minutes wrapping up the week itself. What was up, what was down, what gained, what lost, all of that with Nigel D'Souza. Hi, Nigel.
Hi, Prashant. Well, in terms of what happened in the past week, the bulls, they kept up to their winning ways. So the 5th straight week that we ended in the green, at one point of time, it was looking like maybe we'll end in the red with a cut of around 150 points. But a late pullback, and on the back of that, the Nifty is up close to under 130 points for the past week itself. Let's run you through the indices then and tell you who really gained the most. The Nifty was up 1.5%. Who batted for the bulls? The IT index, that came to life. It was up 8.5% odd, and it was backed by the auto index as well, up close to around 1.5%. But it wasn't so great in terms for the banking stocks, because the Nifty Bank, it pulled back in the last couple of days. It was down 1.5%. The breadth of the market as well was a little bit disappointing, because you have the small cap index that traded in the red, and in fact the mid cap index as well didn't really participate. From the Nifty gainers itself, the top 3 out of the 5 Nifty gainers that we're pulling up for you on the screen are from the IT space. Wipro came out with a stellar set of numbers. Infosys numbers look better than expected. And HCL Tech as well. The commentary was quite good, so those stocks did gain. Besides that, you had BPCL. There are hopes that maybe the government of India will go ahead and divest their stake in BPCL. On the back of that, that as well was gaining. But there were some losers as well. So you have stocks like Z that were underperforming in the past week, down more than 5% odd. Adani Ports thrown there, in HDFC as well. That was a bit of a drag in the past week. But from the mid-cap space, yes, there was quite a few losers, but there were quite a few gainers as well. So you had Jubilant Foodworks. They're going to be charging you for delivery of pizza. That stock was up close to around 8%. Granules, stellar set of numbers. That stock continues to gain. And gold finance companies, they did well. They continue to do well. There were a few losers, of course, when you have the mid-cap index that didn't participate. So you had L&T Finance Holdings, Vodafone Idea, Equitas, BHL, as well as RBL Bank. But to sum things up, the 5th straight week, the bulls kept their date with their winning ways. We were up 1.5%, and the bulls will feel quite good. Back to you.
Nigel, thanks very much. 5th day, bulls are running ahead, and all kinds of bulls, institutional bulls, retail bulls, HNI bulls, and whatnot. I mean, it's, the participation is really exploded, and it's kind of holding so far. So it's a good one. Let me just quickly wrap out what the market will watch as far as the week ahead is concerned. I'll take a minute, not more. So the Nifty on Friday took out Monday's high. So as I said, we came into this week. Monday was a small intermediate top that was 8,894, and we comfortably took that out at the day high. Actually, we came off about 25-30 points from the day high on Friday, but closed at 10,900 plus. So that's the first positive. Massive rotation, right? If you think about where we were at this point the previous week, it was all about financials. We came into this week, financials completely took the back seat. Action all moved to IT. IT did very well. As Nigel pointed out, IT is one of the top performers. Towards the fag end of the week, from IT, the momentum started shifting into energy stocks. Look at BPCL, HP, GAIL. That entire pack started firing. And the one name which started firing once again after 4 or 5 days of cooling off was Reliance Industries, RIL. So that's, again, something to watch out for. The Nifty, as I said, 1.5% higher for the week. Bank Nifty was down 1.5%. HDFC numbers come out on Saturday. That will set the tone for private financials. This is the first quarter we are talking about, which is crucial. News flow around lockdowns will be watched. We are talking about mini localized lockdowns. So far, the market has kind of, refused to pay too much attention to it, although commentary which is coming in from businesses on the ground is that it is hurting. It's kind of turning into stop, start, stop again. 3 things globally to watch out for. The first is that the vaccine hopes. The data out of phase 1 trials, human trials, of AstraZeneca Oxford vaccine is expected to be published in the Lancet Medical Journal on Monday. So it will keep hopes up till we know what the results are. But this is phase 1, remember, the first phase. The US Congress returns from its 2-week recess. Focus will be on how they start to work on the next round of fiscal stimulus. Remember, the stimulus individual checks in the US run out on the 31st of July. So something has to be passed between now and then. And there is also a special European Council meeting over Saturday and Sunday, and we should have some decision in terms of what's the size and the scale of that fund for Europe could be, the EU Recovery Fund. So 3 global things, I think, which will set the tone as well. Let me welcome in my colleague Surabhi as well, who is joining in on the show. And we have our guest, Krishna Kumar, ready. Surabhi, hi.
Hi, Prashant. Yes, what a rally, really, right? Rising COVID cases or regional lockdowns, the market simply doesn't care, at least not right now anyway. Let me straight away take it to Krishna Kumar, Chief Investment Officer at Sundaram Mutual Fund. Krishna Kumar, thank you for joining in. And that's really my first question. This market is moving and climbing all kinds of walls of worries. Does it concern you? Do you think the rally is getting excessive? Or do you think that rightly so, the market is simply discounting a future 7, 8, 9 months down the line, which looks perhaps better than where we are today?
I think we had a panic fall that happened in February, March, right? So from there, I think the markets have been following the data that's been coming through in terms of, the economy is opening up, the utilization levels getting better and activity trackers. So along with that, also, the markets are looking at the kind of easy liquidity that is there and the improvement across the board that we're seeing in different geographies. While we also understand that, we've been starting to live with COVID and managing to operate at 75-80% of the economy in terms of operative levels. So these are the positives that the market is taking heart from. It is taking heart from, the positive news flow coming in from development of vaccines going into phase 3. 3-4 of them probably will get approvals over the next 3 months. So some of these are definitely positives. So we are having a fairly well-rounded, diversified rally in the markets, which has been touching across the large caps, mid caps, small caps, across sectors, whether it's cyclicals or more defensive growth, which was the first one to recover, except the financials, which are a bit laggards at this point in time, given the uncertainty around the moratoriums and stress levels. So I think markets definitely have been responsive to the improving data and also differentiating across sectors like financials vis-a-vis the rest, and also seeing across stocks in terms of the impact. So I think it's been a very balanced move, and not any euphoric one, I would think.
Krishna Kumar, balanced move, but this you also obviously are seeing this rotation, right? What does it tell you? Financials, there's IT, there's energy towards the end of the week which has gone by. It's not staying. Yeah. I mean, it's everything gets ramped up very, very fast, and then the market moves on to the next set.
So I think people are trying to rotate excess weights on a trading basis, but that is essentially coming from a lot of the retail participation. You would have seen in the last 1 to 2 months across the globe, and particularly in India, the non-institutional business is probably about 80 to 90%. And the delivery buying has become a lot more muted, relatively speaking, over a 6-month period. So it is basically, those momentum players who are basically getting in, getting out of sectors and causing this kind of a perception of rotation, which is clearly, what you mentioned. But if you look at more the institutional investors, you do see that they are getting themselves positioned well across sectors, basically, except probably on the financials where they are a lot more circumspect. But otherwise, I think across other sectors, which are a lot more, showing improvement, they are definitely getting back in. So I would think that it is more the non-institutional players who have increased the volumes and which are also responsible in some sense for this kind of a perception.
Okay. Krishna Kumar, let's talk about some of the themes that the market has really latched on to in the last couple of weeks. And one of them definitely is IT. And most of the companies delivered better than expectation. I mean, they're all talking about growth second quarter onwards. Some of them reported improved margins. What is your outlook on this sector and how are you positioned in IT in your portfolios?
The software IT services sector definitely, has been a positive surprise from, the results. While the top line, performance has been more or less along expected lines of a decline across companies. The cost-cutting measures that the companies have been able to get to have ensured that their profitability has been protected a lot more than expected. So on the bottom line, things have been looking a lot better. They also been able to, use the last 2 months of the quarter to wrap up deal wins, and the momentum in deal wins in the pipeline do seem to be very strong. So these basically, along with the fact that the main chunk of IT services revenues which come from the BFSI space, the US and the European banks have seen very, very steady and stable, performance in the last 3-4 months. Unlike the Lehman crisis, when you saw a lot of banks go under and create pressure for IT companies, this time around you've not heard of any banking failure across the globe. So the business, the BFSI business, about 30 to 40%, the largest in the ITPs, has been quite steady. Just a little disruption in terms of work from home, etc. But otherwise, that's been a very stable piece this time. So that's been the positive surprise, and these guys are further investing in a lot more digital initiatives, business development, and also moving on to the cloud. So a lot of businesses are moving on to cloud in a very accelerated manner, given that we have seen that a lot of brick and mortar businesses can move board into the cloud. So there is a faster adoption, and Indian vendors who are partnering with global cloud services and infra providers are enjoying a huge improvement in business on the digital front. So we see specifically companies in those digital revenue streams will be better placed in the next 1 year. So from our perspective, we were a little cautious heading into the results, but we did understand from the US banking and other European banking spaces that the business revenues have been pretty solid. So we have been able to neutralize our exposure there, and we are positive on IT at this point in time.
Okay, that's a nice roundup of the view there on IT. Krishna Kumar, it's always a pleasure to have you with us here on the show. Thank you very much for joining us on CNBC TV 18. Just wrapping out IT, I mean, Krishna Kumar saying that he's positive for the sector, but what do the numbers tell us? We've heard from TCS, Infosys, Wipro, HCL Tech on Friday morning. My colleague Rima is here with a quick wrap-up of what the aggregate sector performance is looking like.
All 4 IT majors have reported their numbers, and the standout performance this time was clearly an Infosys. So for TCS, Q1 was a revenue and margin miss. For Infosys, it was a big beat on Q1 revenues as well as on margins. For Wipro, the stock rallied on the back of a margin beat. though their revenue performance was quite subdued. And for HCL Technology too, there was a margin beat, but the quantum of margin beat for Wipro was much higher than that of HCL Technology. So that's how the companies have fared in Q1. But what was heartening is that all the companies are talking about a recovery in the quarter of September. That is positive. Two companies which give you guidance, Infy and HCL Technology, have reinstated giving an annual guidance after suspending it in the prior quarter. And for Infosys, the guidance is most heartening. That's going to probably be the only company which will end FY21 with a margin, with a revenue growth. The revenue growth is going to be 0 to 2%, but it's going to be a growth nonetheless. For HCL Technology, it should be a small revenue decline of minus 0.5 to about 2.5%. That's what their guidance implies. TCS does not give you a quantitative guidance, but the street estimates are closer to that 4% mark, and Wipro too is likely to see a sharp revenue contraction this year.
Okay, Rima, thanks very much for that roundup. Indeed, IT has been the big headline of the week. We have to take a quick break on that note. We'll come back and talk technicals with Rohit Srivastava on the other side. But in the meantime, do hear out all the market opinion that we gathered during the course of the week. And there are several big voices in this list, so check it out.
India is one of the weakest markets this year. It's down 24%. It's right at the bottom of the pack. So it is an underperforming market. There are other markets which are doing far better by like a mile. So India, in my view, remains an underperforming market, but with some very, very good stocks. We own IT. We really are optimistic about it, and they've delivered the number which we thought that they would. And we own the telecoms, etc. So there are stocks we like, but the market is a different discussion, and we are not saying that there's going to be a broad bull market in India anytime soon. It's going to be narrow, focused on a few stocks.
I think markets are either a leading or a trailing kind of an indication. They are never fair. The good news keeps on trickling. You know, we have some good news on the vaccine front. Financials internationally have started to do very well. Some of the smaller banks which declared their results have declared somewhat better results than expected. So let's see. I am on the more optimistic camp, and I would say that we will come to know only after it has happened. I do find a lot of opportunities in the broader markets.
So long as deaths do not pick up, I think that's evidence that the virus is in the process of burning itself out.
Okay.
So my base case on COVID-19 is that it's in the process of burning itself out. The most positive trend is a divergence between deaths and cases. What would hit markets very badly would be if we suddenly see a surge in death rates in America, i.e. the death rates start to play catch up with the cases. But that's not my base case. My base case is that as the quarter progresses, there's going to be more evidence of economic recovery, and suddenly there'll be a concern that central banks are too easy.
Welcome back. You're with us here on Taking Stock. You heard from Krishna Kumar of Sundaram Mutual Fund, the fundamentals of how things are looking. Let's get the technicals right for the week ahead. As always, Rohit Srivastava of India Charts is joining us to tell us exactly that. Rohit, thanks very much. Last Friday when you spoke, you mentioned that after many weeks, things are looking a little wobbly and maybe there will be a pullback. Right on cue, when we started the week gone by on Monday, we got that wobble. The market sold off over the next 2-3 days as well. But as we finished on Friday, things are coming back. What's your assessment now?
So I think it was a short-term correction that really I was looking for, and that correction was more on the back of weakness that we were seeing in banking stocks. So you had actually seen all of June weakness in global banking stocks. So the US Dow Jones Bank Index was actually down 5 to 6%. And our banking stocks had not yet responded to that. So I think that was a good reason for them to react. And we got that correction, and we got it pretty quickly. And so my sense is at the end of the week, that correction is probably complete by Thursday. The bank index actually went back to the low that we'd made on, that is the Nifty bank, went back to the low that we made on 29th of June, close to the 21,000 mark. And I think that should sort of be the bottom. But what I need to add here is that while banks remain in focus, and I think you will see rallies from time to time because you can't have the Nifty going up without the financial sector, you are going to see long-term underperformance in banking. And I think that will be very similar to what happened after 2008 with most of the global banking, especially European and US, is once they'd been through the financial crisis, a lot of the burden fell onto the banks. And therefore, even though they've risen from there, some of them like Citibank or Bank of New York have really not, or Bank of America have really not gone back to the 2008 highs. And I think something similar is likely to happen here, which means banks will recover, but they are not going to be the top performing, stocks in the market. And so you'll probably, have a underperformer rating on them for a quite long period of time.
Okay, that's an interesting point, Rohit. Noted that. But I guess the market isn't complaining, right? Because the leadership mantle is moving on effortlessly to IT names, to Reliance, and that's what this week has been all about. What did you make of this mega IT rally? And is it the start of something new? Can someone still get in, or is it too late now?
So there will be rotation. So that's the interesting part. My point was to make that was that you don't just look at banking as being weak for a reason to be negative on the market in general, which is what a lot of people have ended up doing in the US also over the last many years. So you'll get rotation into these sectors. But I do think in the short term, the tech rally has probably run its course. At least when you look at even the US, you're getting a little overbought on the tech index. Same if I look at, say, stocks like Infosys. Because this is all event driven, so a lot of them have rallied into the event, and right after the event, you get some profit booking. So they typically tend to consolidate after result seasons. We've seen that over and over again in the Indian IT sector. There's a lot of volatility around the results, and then they cool off from there. So I think you'll get rotation out of IT into other sectors. They'll, of course, continue to perform on a 6-12 month basis, but I think short term, probably the move in the tech sector is done, and you're getting rotation out of tech into other sectors already in the US. So you can see the weakness last few days in the NASDAQ, but you see an up move actually in the transports and Russell and other broad-based, market indicators. So I think same thing happens here. You've seen again an up move starting to happen, say, for example, in pharma this week. So pharma stocks, which were consolidating for almost the last 1.5 months, have now started to go up. So you could see an uptick in Dr. Reddy's, Cipla. I think those are stocks that you'll start looking at again. And as you get news around, the vaccine-related stuff, you'll again see interest in stocks like AstraZeneca and other MNC pharma as well. So pharma should, I think, again come back in focus in the next few weeks in terms of upside. That's one sector to watch. The other one, which I have been tracking closely and which has also consolidated over the last month or so, is the metals pack. So you've seen a rally in the euro, for example, and that's leading to weakness in the dollar, typically good for both emerging markets and commodity prices. So I think metal stocks, which were actually up today, might be starting a rally, because if you look at the BSE metal index, it's actually breaking out of the last 1 month's trading range. So it spiked beyond the top end of that range. It didn't close outside that range today. I thought it would. So we can watch that on Monday as well. And once it does, then it's on the way to a multi-week rally in the time ahead. So watch this rotation. Don't get focused on only banking or only particular sector. And you'll have to keep moving from one sector to the other in terms of the up move that is developing. And the Nifty itself, which is why you see the Nifty did not fall as much as either the mid-cap index or the bank Nifty, because this rotation is helping it, stock-wise. So you saw that big sell-off on Reliance on Tuesday, but then tech held it up. And similarly, now you're seeing Hindustan Lever, for example, make a comeback because all through the last 2 months, HUL was actually an underperformer because it fell in the month of May when the market was going up. Now it is actually making a comeback. So you again getting rotation back into the FMCG space, and that might again support the market. So you'll get this rotation. You need to watch out for it and continue to ride each sector. And the Nifty itself then ends up holding a high level. I think it's made the base at 10,500, 600. And we should now be heading somewhere towards 11,200 to 11,300 in the next 2 weeks.
Rohit, you have 30 seconds to answer this. RIL on the AGM day went to 1978, sold off 200 rupees. Friday came back almost 4%. It's a sector by itself. What do you think the chances are there? How do the prospects look? And second, the other energy stocks, BPCL, oil marketing stocks, which you mentioned are good for upside last Friday when we spoke, and they've done well. Is there more left there?
Yes, so I think the OMCs continue to move. They've just started the rally in the last 2 days. So I think that stays in place because I don't think oil now goes up much more beyond $42. So that's the simple thing. That pressure goes away. As far as Reliance is concerned, it's been the biggest contributor to the Nifty. The one level I'm watching there is 1780. If it breaks that, then I would expect maybe another 100, 150 rupees correction there. But if it doesn't break that, then it will probably keep trending or maybe consolidate in a range before it moves higher. So it's been a performer. It can consolidate. That would also be fine. But that's the key level to watch, 1780 for Reliance.
Rohit, thank you very much for joining us with that technical update for the week ahead. Well, as Rohit says, don't get fixated on the Nifty or the Bank Nifty levels. Focus on sectors and the rotation. He's saying pharma should do well, OMCs should continue, and watch out for the metals index as it breaks out of a 1-month trading range. It's a wrap on this edition of Taking Stock from Surabhi, me, everyone on the team. Thanks very much for watching.